Hello and welcome into the KE Report. I'm your host, Chad Markwitz, and we're getting an update today from Erik Wetterling, also known as the Hedgeless Horseman. And we'll put a link to the Hedgeless Horseman down below to his website so you can follow along with Erik's work. And Erik, always great getting you on the show just to find out what has your attention in investing in the resource stocks. And we were talking for quite a bit off mic just about the wave of companies that have development and advanced exploration projects, but to get rid of the overhang of dilutive financings, they've actually gone out and purchased producing mines. And I'm just going to rattle off a couple companies here, and then we can dig into this topic. But we were talking about Integra Resources, Sierra Madre Gold and Silver, Magna Mining, and Heliostar that have all gone out this year and purchased either one or two mines that are producing, that'll be bringing in revenues to the companies, and then they can develop their larger projects. And their exploration can be funded through organic growth and revenues coming in. And it takes away the market overhang of knowing that there's dilutive financings on the horizon. So I guess let's kick it off with that idea that we're seeing juniors become producers to fund exploration and development.
Yeah, I mean, I think that's kind of the sweet spot right now. As always, our jobs are basically to see what the opportunities the market gives us and come up with like, okay, where do you find the best risk reward right now? And we know that, okay, if we know what the metal prices are doing, gold is at all-time highs, silver is getting there, I was going to say. So metal prices are doing well, businesses are actually good. It's mostly the senior producers that actually are priced like business is good. So when you have these juniors who in a low sentiment environment, they have the problem, it's like, even if they have a lot of stuff to spend the money on, there might be a shortage of money. There might be, okay, even if they produce some good results, the market won't care because they know a financing is coming up next, something like that. Whereas you're creating value, but at the same time, you might get that value discounted by continuous dilution. And that's, again, even if you're lucky enough to be able to get some cash. So I think it's just kind of the perfect storm if you are able to get that self-funding stage where you pick up another company, you merge or buy, whatever you do. So you have that dilution overhang is gone. Obviously, sentiment doesn't impact cash flow. If the gold price is $2,700, if you sell gold, you're going to get $2,700 for it. And then you can do the work. And even if the market doesn't care about it too much, if you have exploration success or whatever, you're still doing non-dilutive value add. And if you have a mine, for example, especially if it's in exploration around the district, I mean, you might be self-funding your future growth, for example. And yes, people might, I don't know, get ticked off if they don't see an immediate share price reaction or whatever. It doesn't really matter that too much to me because I know sentiment will always turn around. And if they can do non-dilutive value creation, one day there's going to be a sentiment change. And maybe if they've created, I don't know, 30% more value, 100% more value, sooner or later that value, all the value that's been created is going to be reflected in the share price. And if you can avoid that dilution discount from just continuously needing to dilute for all the value you create, I mean, I think that's probably the sweet spot right now. I think the juniors with those characteristics are probably they're some of my favorites right now.
Well, and another idea that we were talking about that revolves around this is also the sunk cost that's already been spent by the prior operators. They're picking up for pennies on the dollar, and there's no way that they could not just make the same kind of monetary investment and get the same results back in today's dollars, but also the time and the information that was used to get environmental baseline studies and to study the water table and to deal with social contracts and to make it a brownfield site in the first place. There's so much sunk cost that they're buying that we as investors typically don't do a very good job of valuing because it doesn't show up in an MPV. It doesn't show up in an economic study. But I mean, when you're looking at companies that are picking up a project that's already had a big investment by sometimes one or two other companies, how do you as an investor prioritize the sunk cost that's already been spent?
Yeah, I mean, that's when it gets really abstract. And that's, I think, where you can find a real edge if you are actually mindful of those sunk costs, because like you just said, there's time, energy, blood, sweat, and tears and all that goes into getting a mine up in production. And obviously in the West, especially today, permit to mine is like, it's almost priceless. Some studies require X amount of years. So even if you, again, had the exact same potential for a mine that you can buy right now, and you pay whatever. Oftentimes you can kind of see mergers or acquisitions that I think are being done way below sunk costs. And it's just crazy. So I try to focus on that a lot. Of course, most people just trade juniors like, pieces of paper. So who cares about what the sunk cost, what the actual value? I want to buy something that I think is going to go up in the next month or whatever. But that also, I think, means that, okay, if that's how typically the market functions on a short-term basis, there's a lot of hidden value that you can purchase, because an NPV, for example, that's discounted cash flow. And what does not show up in those studies, typically, if we're talking a developer, it's like, yes, okay, this is a mine that's going to be producing or expected to produce for 10 years. This is the discounted cash flow. Let's say you can get that mine up and running in 7 years. Then you have to discount really that NPV by 7 additional years, because that's how long it takes until they get into cash flow. So I just simply think that there's juniors out there that have a lot of sunk costs, again, both time, money, and energy. And the funny thing with time is, like, some of these sunk costs, you cannot pay more and get it done faster. If you need, let's say, 4 years of water measurements, for example, you can't fast track that if it's by law that you need 4 years. So it's just skipping ahead of that, getting all of that for free, and you maybe can even buy it below what it costs to actually do the drilling and especially building a plant, for example. Long story short, I think there's incredible amount of sunk costs in some of these juniors that, like you pointed out, does not show up in an NPV. So it's hard to figure out, okay, what is this actually worth? How much would it cost to redo this? What is 5 years of derisking worth and stuff like that? Where, okay, on a daily basis, nobody cares. But if you're a value investor, I think there's some, a true hidden iceberg of value in some stories.
Well, and just like digging into a couple of the examples we led off with Integra, yes, they're taking over the Florida Canyon mine, but both George Salamis, the chairman, and the CEO, Jason Kosek, have mentioned they think there's a lot of exploration upside still on just that Florida Canyon mine land package where they could extend the mine life. With Sierra Madre, yes, they're buying a producing mine, La Guitarra, from First Majestic and putting it in production right now. But there's also 7 other historic producing mines on that land package, and some of them that First Majestic spent a lot of money exploring and developing. There's an old tailings project. I don't think anybody's factoring any of that into their current valuation. With Magna Mining, they bought the McCready West mine that they're going to put in production, but they've got the Levack mine, the Podolsky mine, these other mines that are also old FNX mines where they think there's a ton of exploration upside still there because they've already explored those projects in the past. And Heliostar, same thing. They bought 2 mines in Mexico out of that Florida Canyon so that the deal could happen with Integra. And now they've got enough money to explore and develop Ana Paula, but they also think there's a lot of mine life still left in those 2 Mexican producing assets that nobody's giving them credit for. So it brings up the topic of these companies are being priced as a producer now, but they're not getting any of the upside exploration or development work or all that sunk cost on that land that is actually what they're more excited about than the producing assets themselves.
Right. That's I was going to say the important thing. That's what I really want to see. It's like, what can you do with that cash flow? I also want to see, a runway for growth. Can I see stuff happening here with the cash flow, value adding activities for the next, let's say, 3 to 5 or even longer than that years ahead? Because Sierra Madre, for example, what got me sold on Sierra Madre was the exploration potential. Because let's face it, even if La Guitarra is worth more in its current form than Sierra Madre, unless it's worth 4x more or something, I wouldn't be interested just to buy one mine. And it's like, okay, you buy this company and they're going to be producing whatever, 50 million ounces. And you would be probably a happy shareholder at the end of the day because it's going to be worth more than what you paid for it, hopefully. Still, that's not enough for me. I want to see preferably huge exploration potential. I want to buy all the exploration potential for free. If I can buy the producing asset on the cheap or even at fair value, but I get everything else for free. I mean, that's what Pierre Lassonde said, give me free optionality and I'll make you a millionaire. Because in Integra's case, for example, assuming the merger goes through, you might be buying the Florida Canyon mine on the cheap right now. And as you said, I mean, that's not factoring in any of the exploration potential at Florida Canyon, but it's also, more importantly, you're not paying up anything in that case for Delamar or Nevada North or Red Canyon or any of the other exploration projects or any of the exploration potential within the more advanced project. I mean, to me, it's just absolutely insane how much value you can buy. And Sierra Madre, you're not paying up for the district scale exploration potential. And in Magna's case, I mean, would I love Magna if they only had McCready West, even if, let's say, McCready West was worth 300 million and Magna selling for around 200 million? No, that wouldn't be enough for me. But you get the Green Hill deposit, and that's already there. That's like a bird in the hand, a big bird in the hand. Then you have Shakespeare, and then you have all the exploration potential. And in the hands of these guys who've literally made, many of the discoveries at said mines, I mean, talk about, having the right people to actually unlock the exploration potential as well. So it's like when you stack it all together and you put some value on all the exploration potential and the advanced projects, at the end of the day, you're seeing that, these companies are maybe selling for fair value or selling for less than their whatever most advanced project, meaning the mine typically is selling for. And I get all of this, an entire pipeline of potential mines or, at least exploration potential for free. It's like, how on earth can I be overpaying for this? So it's like, okay, what's a blue sky scenario? Sierra Madre, they prove up a district. What's that going to be worth, let's say, in a better market? Magna Mining, they get 3 mines up and running and have some footwall discoveries. What could that be worth? You have Integra, let's say they have 2 to 3 mines up and running in 3 to 5 years. Compare all of that, all those possible scenarios to the market cap. It's like, I actually do think, I mean, it used to be that you had to take enormous exploration risk to have a shot at a 5 to 10 plus bagger. I think some of these juniors, the more advanced one, even the ones that are now or soon to be in production at least, I think they're so cheap. And given the pipeline that you get for free, I actually think they have like 5, 10 plus bagger potential. And I'm not used to seeing that.
Yeah, it's a really weird environment. I think it only comes in an environment where things are so devalued that they can pick up these producing assets for pennies on the dollar with the backdrop of some of the highest metals prices we've seen in years to make fat margins on them, because these were typically not the highest grade mines that any of them bought, but they have really solid margins right now with where metals prices are. And because they're going to be able to take those funds and just plow them into becoming multi-mine producers. So they're basically going to be able to bootstrap their way. And people say, this doesn't work. But this is a time where it actually may work, where you start with one mine and then you fast forward the clock 3 to 5 years and all these companies have multiple mines going. So they could all become mid-tier producers. But the big prizes, the jewels of their portfolios are their development and exploration projects. And this is just a means to an end. It's just an interesting trend that we're seeing. And I don't remember seeing as many of these kind of transactions as we've seen in 2024. So it's been one of the takeaways from this year as juniors going into production to fuel development and exploration. But there is another company we were talking about off mic for a while, and I think it'd be nice to highlight it, more of a traditional exploration stock, and that's Kootenai Silver. It's traded on the TSXV under the ticker KTN. And they have a story, and we interviewed Jim on the show quite often. They are a sponsor on the show, I should disclose, but I think they're an interesting story from the standpoint, Erik, that they are kind of a sleepier silver exploration story. They've been around for a while, over a decade. They've got some advanced projects that have resources at Promontorio and at La Sagara, but they have this new project, Columba, and I think a lot of people that look at Kootenai put them in the basket of, well, they got a lot of, kind of lower grade bulk tonnage silver projects in Mexico. But this new project, Columba, they seem to be onto a vein system here that's different than what we've seen before. And it's more reminiscent of what you would see with Silvercrest with their Babacanora vein, or at Vizsla Silver with their Copala vein, where this vein, this D vein that Kootenai Silver is exploring right now, has wide intercepts of really high grades, the kind that can allow you to mass up resources really quickly. And they're going to be drilling a B vein that's kind of parallel to it or kind of angled over towards it. And they've already drilled some of the F vein, but this D vein in particular could be one of those Mexican veins that's just thicker, higher grade, and could be a company maker. And I think a lot of people are asleep to the story because they're thinking of, the old version of Kootenai, not this new project. What do you think of the drilling going on at this Columba project?
Yeah, I mean, I think this is a story like you said. I mean, it's been around for quite some time. It's been known. I mean, I think they were around when I started investing in this space. They have at least 2 additional projects that they have resources at. So everybody knows they have silver. So you have that inherent beta, but you didn't have kind of the barn burner exploration results, let's say. So it's more of a run-of-the-mill Mexican silver explorer. This new discovery, the Columba vein, which could literally turn into a district. I mean, that looks better than the other ones. I mean, the results, as one can see looking at the presentation, they are quite a bit more eye-catching. So I would say that this is like nice from a risk-reward standpoint in the sense that, okay, you at least know you get some silver. So you have some beta. I mean, you have, I don't remember what the global resource is for the company, but you have the leverage to silver because they have a bunch of ounces, not the best quality ounces, but they have them. So if silver goes to $50, for example, they're going to be worth more. But you also have this now, a story where, okay, they actually have some high impact silver exploration potential, which could make them like a standout in the silver space when it comes to exploration success. So they don't have a mine, they don't have a production, they're not internally funded, let's say. But I would say that I kind of like the risk reward in this one right now because from what we've seen from Columba, they can really produce some eye-catching drill results, and obviously it's still wide open pretty much everywhere, and they have more veins to test than they have drill rigs, but they're cashed up and all that. So I can see typically a junior trades on its, let's say, flagship asset. That's why, when we talk about these multi-asset juniors with production, all of that, the market tends to forget about anything else than whatever it is focusing on. So I think in this case, I think Columba has stolen the show, so it's probably going to be more of an exploration story going forward. But I don't either think that the market will totally forget the fact that they have 2 resources already. So I see it as a quite asymmetrical bet. I mean, the blue sky is obviously that Columba becomes a new Silvercrest, new Bisla type discovery story, and we can look at the market caps for them to realize that, yes, that's quite some upside. But if this fails miserably for some reason, they at least have some silver backing. So let's say things don't go really well, but silver goes up. I don't think you're going to lose that much money at least. There's a way to get out, let's say, because there is some on paper margin of safety at least. And then you get this, potential, a higher risk, but higher potential from the exploration front at Columba, which could obviously catapult the story, make it go much faster than a typical beta play.
Well, just to follow up on this has happened a lot in the resource sector, since I've been following it the last 15 years, where there are companies that are, I will just call them like sleepier stories. Like they maybe used to have a lot of market attention, then the market, for whatever reason, the sentiment turns and they've spent some money drilling out and exploring projects, and they're seen as valuable, good projects, but they're not really lighting it on fire. But then something new happens, some new catalyst. So a new discovery typically is what happens, or something underneath their deposit or adjacent to their deposit or a new project. And there's this transition period between the old way of thinking of the company and the new way of thinking of it. Like I'm thinking of Abra Silver right now. Like everybody knew that Oculto was there in Argentina. It had been known for a while, for a couple of decades, but they made this new discovery over the last 2 years, the Jack Zone, and it changed the front end economics for the project. And there was this period of time where nobody was paying attention, and I felt like we were pounding the table saying, is anybody noticing these drill results? Because they're amazing. And then finally there was the catch-up trade where everybody piled in, and it did get, some more market attention. So something like that could happen with Kootenai here, where, everybody remembers the old story, but now this new story is happening, but there's this period of time before people wake up to it do you look for opportunity setups like that? Because you were bringing this up to me off mic, and I was kind of the same mind. I said, well, let's just talk about it today. But are you out there scouring for old stories that have something new that nobody's paying attention to?
Yeah, well, kinda. I mean, as you know, an ex-poker player, I mean, the psychological edges you can get is like, how do people think? How does the market work? And that is for sure a thing where it's like a story that, let's say, was very hot, had a lot of attention, it disappointed enough people, and then it's just basically they can almost do almost whatever. They can even, some can even have some really good news, and the market doesn't care. I mean, the market just has given up on a story, let's say. And that's obviously not a rational thing per se, but that's how people work. And it's like I find myself doing that as well. And people typically don't, if they get burned on a story, if you get burned on a story and you sell out, you have so much, let's say, anxiety or negative emotions tied to a story. And a lot of other people do. You know, if you see someone mention a story, it's like only negative comments are going to come of that. So it just gets negatively charged, basically. So then stuff can happen that are net positive, that should really have an effect because it's obvious value creation. But again, it's kind of painted with that negative brush. So yes, I'm not actively looking for that, but that goes for like irregular companies as well, where it's like they've been killed by the, let's say, people front running a placement or something, and they do a bad race or something. So nothing has really changed for the story. It's just in that case, share price disappointed. So people think that, well, this story is not exciting anymore. So like you have a bunch of stuff like that going on. And it's, in my opinion, our job is like, okay, to stay rational, think about the implications. A news release comes out. The market doesn't care because they hate the story. The story has been boring. The share price has not gone up in the short term. But it's like, okay, this news release we're looking at is like, okay, what does that suggest about the next 10 news releases or next 20 news releases? Obviously, a discovery is one that can actually be the front runner of 50 positive news releases over the next 3 years. So in that case, we're like, okay, does this change the story a lot? Maybe it does. Okay, if people don't care about this news release because it's so negatively charged still, nobody wants to touch this company or everybody's bored with it. It's like, will they still be bored given what this news release suggests about the next 10? Maybe it takes 12 net positive news releases from here on out to actually get people to like the story again, to view it in a different way. I mean, if you can front run that future scenario, so you're using the fact that nobody gives a crap about the story now and it hasn't moved and yada yada. And maybe it's going to take more than one news release, but it might take 5, 6, 12, whatever. It's like if you can see a future like that where you're getting it incredibly discounted, and it's like not that a discovery hole or a few discovery holes makes a barn burning success, but it obviously is the first step to making a big success. I mean, Viceland, Great Bear, and all of those, they started with a few good drill holes. So if nobody cared about those stories, for example, in the beginning because their previous projects weren't as good, whatever, it's like you should forget about all that past history, really, because this is a totally new project. What happened at another project doesn't necessarily mean the same is going to happen at this new project. I mean, I like to, think of it like if you play aces in poker 5 times in a row and you lose all of them, I mean, you might start playing aces in a different way because the result has been that you've lost, but you really should keep on playing them the optimal way and just not look at what has happened. But stuff like that, or a lot of stuff, changes how people think. And since junior investing is a really emotional thing, that stuff happens all the time. So I'm not actively looking for it, but for sure, there is most certainly edges to be had if you can spot some of those cases where the market is stuck in 2019 and they just put out a news release that basically potentially transformed the whole case.
Yeah, I think it's a great point, and it reminds me of an Anthony Robbins quote, "The past does not equal the future." Just because something happened in the past doesn't mean you can extrapolate it all the way out into the future. And somebody can turn the corner at any time. And the great part of this business and Expiration is you can make a new discovery at any time, and it can totally change the whole game. You can put a hole in the ground that changes the course of history and becomes a mine, or you could put a hole in the ground and find nothing. That's the beauty of the speculation on the expiration, but it's usually paired with good science. And in this case, I think the team at Kootenai is doing good science. They're following up on a trend. They seem to know where the high grade portion is, and it's going to be interesting to keep following along with their drill results. It's also interesting to follow along with the other companies we mentioned that have now bought producing mines, and they're going to be growing organically to fund the rest of their development and exploration. We'll definitely keep tabs on all those companies. And Erik, it's always great getting you on the show just to get your thoughts on what has your attention, what you're looking at in a market that's still kind of sleepy, even though the metals prices are staying elevated. And if people want to follow along with Erik's work and the companies that are on his radar and the companies that he takes deep dives into, definitely check out the hedgelesshorseman.com. We'll put a link to that down below. And Erik, looking forward to our next conversation.
Thanks, Chad. And as always, consider me biased. I may own shares of the companies we talked about.